There's always a chance that the Reserve Bank will hold in May, and in a vacuum, a 0.7% quarter-on-quarter trimmed mean result for inflation, which takes out the volatile stuff and shows the underlying trend, would be something where you could equally make an argument for a hold or a cut. But given the global backdrop, and by that I mean all the uncertainty that's been revealed from ongoing tariff negotiations and retaliations, there's very unlikely to see a hold, and we think it's a near certainty that the Reserve Bank will cut rates by 25 basis points in May.
Ahead of the CPI release, markets had been pricing in a slim chance of a cut greater than 25 basis points. How likely is that now?
It's not likely that we will see more than 25 basis points in the rate cut in May. Other central banks across the world haven't had a flurry of larger easing, and the Reserve Bank does tend to be one of the more conservative central banks. Also, in the domestic economy, it's a good year to have a bad year. We have a really solid labour market. Households have been resilient to those higher interest rates. There was a nascent consumer recovery coming through before the tariffs. It's really just about offsetting some of the negatives from that global backdrop rather than anything local, which means a 50 is unlikely to be needed.
Now, a cut in May would be the RBA's second this year. How many more does ANZ expect in 2025?
Including in May, ANZ Research expects 3 25 basis point rate cuts from the Reserve Bank in May, July and August. This will provide some offset to the consumer and business decisions that are more likely to be a bit cautious now that we're seeing that global volatility. If needed, we'll also see fiscal response. And these two things, these policy settings, will probably be the biggest change we see in the Australian economy from tariffs and their related impacts on global growth, rather than anything in the headline economic metrics. And by that, I just mean unemployment and GDP growth.
Adelaide, we will receive another update overnight on the health of the US economy with GDP data due. Is the US outlook now key to whether the Reserve Bank changes what many have interpreted as a hawkish stance?
Look, the US growth is relevant to Australia because it is in some sense a proxy for global growth. We've downgraded at ANZ Research our US GDP forecast from 2% this year to 1.5%. We've also materially downgraded our China GDP forecast, our Indian GDP forecast, and our Asia ex-China GDP forecast. All this to say, we think the global economy will be growing more slowly. When the global economy grows more slowly and builds less, we export less, and then we tend to grow more slowly as well. So the slower we see global risk appetite and economic growth, the more likely we are to see interest rate cuts locally. But it's not necessarily going to be a big amount of cuts. It's just a little more than we would have expected otherwise.
We know investors are hoping Trump's tariffs are in the process of being wound back. But is a US recession looking increasingly likely?
At this stage, we consider a US recession at around 40% likelihood. So on balance, it's more likely that there won't be a recession, but it's certainly a material risk for the US. Whereas in Australia, the risk of a recession is extremely low. In fact, even with these tariffs and potentially downside risk to Australian GDP growth, we actually think we'll see more economic growth this year than we did last year.
Does that mean a rapidly slowing US economy isn't really likely to hit Australian consumer sentiment?
Australian consumer sentiment is going to be hit more by the uncertainty and volatility in the global landscape. Only 5% of Australia's goods exports go to the US, so the direct impacts of tariff and of US demand is relatively limited in Australia. It's more around how the total global economy is going to go and how tariffs on the globe reduce the amount of goods and services that people are exchanging, and therefore the amount that businesses want to invest and grow, and therefore the amount that they want to buy from little countries like Australia.
Adelaide Timbrell, thank you.
Thanks.